All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely always happy and grateful for each and every one of you being here with me as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So, without further ado, let's make sure we turn off any and all distractions, get locked in, grab a pen and paper, take lots of notes, and let's make sure we participate and engage. For our newer members, let's make sure that we get those questions answered during these live sessions. This is what we are here for, right? It's not just about taking trade setups and signals, it's about actually learning how to do this yourself, right? That's the mission. So, with that being said, if everybody can hear me loud and clear, you're ready to go for this tonight's session, drop me a one in the chat and we can get right going on this Thursday night session. Awesome. All right. Appreciate that. So let me close this out as usual, get things going. Let's pop over, take a look at trading economics, right? You see Asian stocks track Wall Street higher, right? Australian home loans fall more than expected, right? So we're getting some mixed data coming out of Australia. It's going to be quite interesting because still in the back of my mind have that China reopening and the impact that it could have, right? We got the good numbers out of China in regards to manufacturing yesterday, so we'll continue to keep an eye on that. PMI revised over for Japan, more concerned with their monetary policy, which seems to be continuing along its normal path. U.S. futures ease its Fed outlook mold. And we see ECB numbers. This is important and divided over the March signal, okay, in the minutes. So the market's already priced in, at least 50 basis points for the next couple of meetings. I think they're still leaning towards that, but we shall see, especially, right? You got the key inflation data coming out of the Eurozone, right? Inflation, Eurozone inflation rate is above forecast, right? But the fear is always getting too aggressive with those rate hikes because the aftershocks, right, and the effects of interest rate hikes in monetary policy is always lagging. So you don't want to get too aggressive, too far ahead of yourself to where you do more damage than you want to, right? In regards to the possibility of spiraling into a deeper recession. So these things are always very, very important for us to keep an eye on. So we'll see how the rhetoric as we're now into March second day. It's going to be very important for the ECB. I'm still leaning towards, because the market is already pricing in those rate hikes, 50 basis points potentially. I'm still looking bullish, right, for these euro pairs. We know that a lot of them, a few of those pairs are in correction phases now, but we're still in that up AB boundary. And besides the counter chin trade setups that we have on some of the euros, I definitely want to get long, right? Especially in regards to like a pair like the euro JPY, just because we have that monetary divergence, right? So there was hopes before we saw a little strength out of the yen, because hey, they're getting a new they're getting a new BOJ governor, and they may look to change, right, their policy outlook and change their philosophy a little bit. Maybe we see a raise in interest rates, but new BOJ governor came in and pretty much, at least the rhetoric in the short term is, hey, we're continuing along our normal path, right? And then when you look at the ECB being aggressive, they can eventually get into upwards of 4%. Ultimately for the Eurozone, it's like, man, that's a decent divergence there that we may want to take advantage of here in the near future. So when we look at the Euro area, right, you always can come down on trading economics. So you can take a look at the current interest rates, right? You can look at GDP, inflation, everything, jobless rates, all right here summarized. So if you come to the Euro area, you can see right now we're at 3%, but just below that, Japan, you can see it's negative, right? Holding that. So if they continue to hike rates, now remember, the Eurozone, way back, it seems like forever ago now, when all of these aggressive rate hikes start coming into play, the Eurozone was a little bit of a laggard, right? They definitely weren't out ahead of the pack. So when you're looking at these interest rate hikes that they're talking about, potentially 50 basis points for the next at least couple of meetings, that's that catch-up game. So they're up to 3%. getting aggressive, 50 basis points the next 2 consecutive meetings. You're looking at 4% there. Meanwhile, here with Japan, you're still looking at where they're holding that rate. So you can definitely see a run up in the future on a zero JPY. I mean, we're already going north. We're just trying to, for next potential setup, if you're not already involved with like a EJ long, then you're looking for an opportunity for a low price to get in and potentially get long on that. So we'll continue to keep an eye on things. If we head on over to the Forex factory, you can see it Thursday. So we got Reserve Bank of New Zealand Governor Orr speaking. That's tentative. That's going to be late. And then again, we know we've got, when you look at the CPI, core CPI for the Eurozone came through hot, right? We were just looking at that article. Unemployment rate numbers, 6.7, right? The preliminary CPI for Italy came through hot as well. So got to do something about it. Have to do something about it. I know globally it's been a political issue, but especially here in the United States, one thing we have to think about when we talk about in terms of like immigration policy, and folks are talking about building walls here before in the United States, but one thing you have to think about is when you have a situation where you have a tight labor market and you have more jobs than you need people to fill them, and you're locking people out, people who typically can work these construction jobs and things like that. Guess what you have to do to get people to work the jobs? Anybody want to take a guess? Right? If you have job openings and you're messing around with your immigration policy here, and there's all of this back and forth about letting people into your country, people who would normally take those jobs, what do you have to do to fill those positions? Exactly. You have to pay more, right? And we're already talking about wage growth, right? You already hear Fed Chair Powell saying, hey, we're not feeling the pain, right? Job market is still tight. Wages are still going up. So you're going to have to continue to pay more. So therefore, inflation, right? That's just one key data point to pay attention to, is gonna stay sticky, right? If we continue to see people hiring, you're gonna have to pay more money to get them to come to work. So we're all connected. We're all connected, whether we like it or not. We say it all the time. So that's another thing that's affecting, at least here in the United States. That's something that a lot of people aren't paying attention to, but the big players are. Okay. So tomorrow, March the 3rd, we've got ISM Services PMI coming through for the United States. So we'll see the forecast is 54, right? So anything over 50, right? We're talking about expansion and contraction. So we want to see it come through. So actual, right, greater than forecast is good for the currency. Above 50 indicates industry expansion. Below indicates contraction, right? So we're talking about growth. So that's going to be an important number tomorrow. So we may get some Friday volatility. So I just got a raise yesterday. Then getting one next year. Right. Right. I'm glad you got it now, but that's all right. You give yourself a raise. You know how to make money from money now. All right. So regardless of what they do, you're gonna be okay, Joy. You're gonna be okay. So that's pretty cool. So let's take a look at it, right? So let's go over, take a look at the 10-year. Hey, we hit that we went above 4%, and now we're kind of turning over here on the 4-hour, right? We got an official high there of resistance, okay? So now, right, we've got that corrective action, okay, on the yield. So still a strong dollar, but we've been talking about that key level. And right now we can see it stalling a bit. So if we come over to the DXY, okay, it's pressing, okay? It's pressing the level, but you can see it's rejecting a bit, right? Correction time, like we were thinking about the possibility. See how it's holding at that level and we turned over? Okay. It all flows together. It all flows together. So that's where we are. The dollar's correct. I'm not sure how sustainable that's gonna be. Right. So here was our zone yesterday that we had drawn up, and we could see price reacting. moved back up there in a hurry, right? Past resistance becoming future support. Okay, so we don't trade the DXY, we just use it to gauge dollar strength, right, against the other major currencies. Okay, so now we see it correcting and moving to the downside, but we're in another zone right here that we have to be aware of. So we'll see if it holds at this level and makes another run to the upside, or we're going to continue back down. We've got a stochastic in the sell zone. So, hey, maybe that we know now, right after that high was formed, we got this double top, that the momentum slowed, right, to the upside. And now we might be turning over. Okay, so we were way overbought on that. So let's see if we get that relief. So it may be correction time for the dollar, right? How far it moves down, don't know. But we have a reaction. Any questions on the fundamentals or the US dollar?
No.
All right, appreciate it. So let's go and take a look at some of the things we covered during last night's session. Check the progress on them. As we move forward into March, I want to take a look at this Euro CAD because we're thinking head and shoulders pattern. And it's been a super busy day today. I had a lot of presentations and stuff, so need to see what's going on with the flow. So here we are. All right, we could see it. We can see it from this level, right? Even on the daily, left shoulder, head, right shoulder. Okay, here's our neckline. We've got a bearish reaction. Okay, so if we come down to the 4 and we zoom out, we can see that we definitely got a reaction. All right, we have marked up that 4-hour level, and we got a reaction to the downside on that because we know ultimately, right, if we continue to zoom out, that we've just got a good fight between the bulls and the bears playing out. We still haven't gotten that 4-hour 38.2. But if we're just looking at the price action right now, take our head and shoulders off, okay? We held, created a 4-hour high, we pushed down, we broke structure at 144.40. So now we're thinking what? We took out a low, we took out this daily level. So we think, hey, maybe we get to the point where we get a correction and then a continuation down. Okay. If that idea to the 38.2 is going to play out, right, maybe we get a correction and retest the zone, and then we move back down. Okay. But so far, all right, off that high, right, over 100 pips. Okay. To the downside. Now we've had a long impulse move, right? And so if you come down to the 1 and you drop that fib, lower time frame chart, it's all fractals, right? We already have a new fib forming. Okay. So what we want to look for is that correction. Okay. Look for is that correction. So we may push, don't be surprised, right? If we get back up through this zone. Okay. If we get back up to this zone and we push back up, right, to this level, like so. Okay. Right. Okay. So we have another potential crown, right? That kind of helps you set up potential targets. So we have this level, but it might push back up, right, to retest the high. So just continue to keep an eye on that. If it does that, right, that's the sweet spot right there. Anyway, okay. So, right, left tip, center tip, right tip of that crown. It took that low out, right? So we don't have a head and shoulders here because we don't have an even neckline. So, price didn't hold there and reverse, right? We broke below. We took out that support. Now we look at the pullback. Okay. So that's where we are. So we'll see what type of reaction we get. Of course, If we turn over prior to that 382 and we hit this 118, 127 zone, then we know we have the potential, right, for a potential 80-20 there. But we'll let it play out and see. Okay. So that's where we are on this Euro CAD, keeping in the back of our head that we still don't have that 4-hour 382 hit yet. Okay. So this was the markup from yesterday off of that crown. Right. And then this is just sub-fib now that we've got price to turn over. Okay. So we got this pull back to the zone. And now we're looking to see if we can get this move to complete that ABCD wave. Any questions on the Euro CAD? Oh, all good. All righty. The other one we were watching, making progress, and congrats if you held it. I actually got out and it kept moving right on down. I'm like, okay, I'm up pretty good. We'll go ahead and take profits, but it kept right on rolling. Was the pound CAD. So let's see where we are on that. But I've got an idea. Well, it's already kind of playing out that that's going to start to retrace on us, right? So here we are. We'll take a look at the setup first, okay? So it's been an awesome move. And we move right off that 127, right? 270 pips off the 127. So that was a pretty good move. Now we're getting a correction. Okay. We're starting to get a correction to the upside. And on those plays, you could, I mean, on these type of setups, you can make plays off of that, right? To the counter, right? Especially on your lower time frames. But right now, I think we're gonna pull back a little bit. And we may continue. We may continue to give us a deeper correction. We'll see. We'll see how it goes. But that was a really good setup today. The reason why I'm thinking that it may bounce and go quite a ways is because on this 4. Right. I'm looking at this 4 away. You see how it kind of came in and double bottomed at this level here. So I'm like, all right, if this holds, right, we get that low to form, we might move up. We might move up quite a ways there. Okay. So we'll see what happens because my 4-hour stochastic is in the buy zone. My 1 hour is still moving up, right? So I'm definitely thinking it's correction time. So if you've been holding that to the downside, right, just continue to manage your trade, just your stops. You don't want to give too much back to the market. You don't want to give too much back to the market. So just continue to watch it. If you're still in it, if you're out, congratulations, right? Maybe you got out of TP1, maybe TP2. But that was a nice setup on the pound CAD. Now let's see how it reacts at these levels, potential correction. All right. Any questions on the pound CAD?
Nope.
All right. Now the other one, right, was this Euro Swissy. And that gave us, right, everything we were looking for on that. Okay. So we're down to that 382 now, right? Potential 61.8 or deeper on that Euro Swiss. Right. But we covered this one last night. We popped up around that zone. So you tried to get up to that 118 level, but it closed back below that dollar level, right? That's a good sign, right? See how it wicked out and didn't close, and then we moved to the downside. So off that level, right, you're down at 62 pips, and we may get a deeper correction coming into this 61.8 and that TP2 level there. So if you're in that one short, always manage to trade properly. You're at 1 TP level. Looks like it's wanting to turn over, right? Break through the cloud, maybe push deeper. That's okay. Eventually, I'm looking to get back long on the Euro Swiss. You can't hit your stop loss and profit. That's good. That's good, right? So that was a good one, right? Good amount of pips to the downside on that 80-20 on the pound CAD. So you do a really good job of managing your stop loss manually. That's really good. That's a really good way to do it. Really good way to do it. All right, so that's where we are on that with. So we've got more potential downside. We'll see. We'll see what happens on the Euro Swissy. Any questions on that in general? Still overall bullish on these Euro pairs, right? But we know it just moves in cycles, right? We gotta correct. I got stuff going all over the chart. We have to correct. So there's that daily fib. Let me run the fib off the lows on the 4. Right? That could have fired off at the fib already, but it's cool. Yeah. So let's continue to see how good of a correction we get on that, because we're corrected and we're above the cloud, and we ultimately want to be long. You said you're in the Euro Swiss from Ryan's 5-minute play. Pick up the second entry about to close out. Got it. Got it. All right. All right. So here we are, right? Pulling back. Be patient. Be patient. This could be a good one. All right. Let's see what happens. As you can see on the daily, right? We pull back, right? Daily, right? Overbought. So let's continue to be patient now. Continue to be patient. See what happens, right? See what happens. Right now we're holding at the Keynesian, right? That level of support. I'd love to see if we can get it to push a little bit lower. That continue. All right, but definitely still thinking long on the euro overall. But that was a nice counter trend move on the 1-hour chart. Let's take a look at this GJ that we were going back and forth about last night. And it made a decent move. To the downside. Made a decent move. So we were debating, right? At this level, are we going to get a reaction and a move to the downside? And we did. We did. Right. So we kind of turned over there. And then if we come back to, we were really looking at this thing down here on the 15, right? Get more granular with it. It made a nice move. Right? Now it's moving sideways and push it up. But that was pretty good. That was a pretty good move. So you had this level here that we spotted, then it was pushing up to retest, right? So out of that zone, right, to that lowest point, 70 pips or so. Right, here's that break of that outer trend line for close to 50 pips. So we'll continue to watch that. Right, there's your crown. Right, you all can see that now. Just a little bit of spatial intelligence. You all have it. Got it. Right. So there's your crown even when you're 15. Right. So you see this A, B, C, D. Okay. So think about what it does when we get a crown. Let me just draw this out. Get this over here. So if you get a crown as an up ABCD wave followed by, right, a down ABCD wave. So if we look at this, right, and move like that. And you get this ABCD wave type of action. So if this is my A, and this is my B. This right here, if I can get it to work, right? It's my C, and this is my D. Okay. Then we already know that once we get an ABCD way to finish out, my C becomes my what? My new A. C becomes my new A, and my D becomes my new B. What happens? So when we do our crown, now we spot it, right? Say to ourselves, that one price breaks the trend line. Okay. Two, price takes out the A. Okay. So price took out my A. A, B, C, D. A, B. What do we normally say, right? As long as price doesn't take out the A, it has no choice but to go my way. Well, it took out the A. Right? So one, price breaks the trend line. Right? Then we get more aggressive. It actually broke an inner trend line like that. The fat bearish candle. Boom. Okay. Two, it takes out the A. Three, identify your left tip. Yeah. So back up here. Three, five, the left tip of the crown. Four, for C. Get it? For C. The market moves in what? A, B, C, D ways. For C, right tip of the crown. Okay. So what does that mean? I want to potentially foresee, because I'm looking into the future, foresee the right tip of the crown. See? Everybody get that? Drop me a 1 in the chat. So foresee the right tip, right? So we're seeing into the future, projecting where if we get a pullback in a correction, after we notice these things have occurred, the first three things have occurred, right? Foresee where we might look to enter that trade, right? So I've got the trend line break. My A is taken out. That means we're looking at, okay, we potentially have a reverse. So this is why when we say, hey, when that A is taken out, flip the fib. See that? So that's a shallow crown. there. And number 5, you draw your downtrend line. This. So take this out. That was from that price action I caught last night. This. So at this point in this pullback, your trend line wouldn't have looked like that. Because at this point, here was my high, right? And you try to get that trend line through the point. So would have been like this. All right, so like that. So you draw your downtrend line. And that is your ground pattern. Screenshot that. So you have it. So that's a classic reversal pattern. Right? Now, it's not a irregular, lopsided head and shoulders, right? Your shoulders, your collarbone, your shoulders and collarbone, you look like this? No, you don't look like that. You don't look like that. See that even neckline there? Right. That's the difference. Okay. So this is not a different type of head and shoulders. It's a different pattern. Okay, some people don't realize that. Yeah. Can't just make up stuff in the market, right? People that made these patterns, they made them for a reason, right? Came up with them. That's the difference. This neckline was broken, and then price pulled back up above that neckline, and then corrected to the downside. Got it? All right. So that was the GJ. I want to look at I want to take a look at this. Oh, you're welcome, JC. I want to take a look at this NZD CAD. Let me see. Here. Because we said, hey, we're looking for a correction and we got it. So the question is this ready to move? Right? We don't have a it's bullish here, but we don't have a bullish Kumo twist up ahead. Right. So just continue to pay attention. I drew a trend line to the downside to see if it was ready to go, but it may be. Right. So watch that swing. You can even wait for it to break above the cloud to see if we get a cloud shift up ahead. Right. Wait for some things to align. Okay. But keep an eye on that. Right. We're above the cloud on this NCD CAD. We know that we've gotten a boost, right, in the New Zealand currency lately because, right, of what's going on in China. So just continue to watch that. So we say, hey, we need a correction. We're getting that one. Better believe it. That's a nice one. Nice B2C move there. Okay, so no 80-20, but you got a nice U-turn right off that B boundary. Okay, so now let's continue to watch to see. Here's this 84 32 level. Maybe it works its way down there, who knows? But we also have that I don't know, Jeremy. The triangle pattern. I have to look that up. It's a good question. I'll write that one down. I don't trade triangles. I'll look it up. Great question, though. I'm always interested in learning something new. Oh, you're welcome. So here we are. We know this is tentative. 10:30 or so, an hour. We got the Reserve Bank of New Zealand Governor Orr speaking. Has the potential to move the market. So definitely not ready to move on that yet. But we shall see. Look here on this on the 4 now. On the 4, we're lining up pretty good. Right. We got this D extension that was already hit. We've got a correction already. This is a funny looking setup. But nonetheless, right, just looking at the price and we got a break, we got a retest. They're right in this zone. Buy zone. And we've got Governor Orr speaking. So not ready to enter that trade yet, but we'll see what he has to say. We'll see what he has to say on his entity CAD. So keep an eye on that one. Then take a look at the we're back in order. This one is already it's kind of doing this thing. So this thing is kind of bouncing around. I was looking for I'm thinking like, all right, is this going to get range bound with that dollar correcting to the downside? So if we move down through the charts, I'm looking here at this 4 hour. Look how we've broken back above this 119.58 level. That caught my eye. Okay, that caught my eye. So this we know is never just a line; it's a zone, and you can see here how it's just holding right in the zone. So if we're on a 4, we're actually looking at something like this. Right, we've got these lows. It's kind of tight. Okay, like that. We've broken and closed back above there. So now if I come here, see how we got that reversal and it played out. See that? Bang. A, B, C, D, A, B. Right? We're back above this level. So what I want to see, this initial move has been made already. So what I'm interested in seeing is down here on this 15. See? Yeah, we got this move to the upside. We've got an inner outer trend line break. There's the target from the higher time frame. So it's all going to depend on how much this dollar wants to correct. But we are back above 119.58. That caught my eye. Don't want to buy now. Let the D extension get hit, but on the 15, right, if we can make that progress here, this would be our C, lowest point within the AB boundary. You get that D extension hit, wherever that next high forms after that D extension is hit, it's going to give us a new fib. So then the question becomes if I can get it corrected. So this one good thing about the fibs is it kind of lets you kind of forecast ahead, almost like trying to predict the weather, right? But you can kind of draw up and start to develop some trade ideas from it. So if that dollar continues to correct to the downside, then that might lend, right, by way of dollar weakness temporarily for this to correct and then continue long. So being that this initial move has already been made, not going to do anything now, but I will continue to watch it hit this 15-minute D extension and to see if we can get a new fib to form for correction and a continuation. All right, so keep an eye out on that pound dollar. Okay. Especially if we hit this D extension and we get a correction before that TP1 is hit on that 1 hour fib. Then that means we got room to still move up, not only to that TP1, but beyond it. So just continue to keep an eye on the pound dollar. Any questions on that?
Nope.
Good. Okay. Ryan, I know you're listening in, man. How are you?
What up, bro?
I'm doing well, man. I'm doing well. How are you?
Doing pretty good, man. Looking to close out the week. Busy day today. 5 presentations. Voice a little rough, but good. Good. I'm good.
Yes, sir.
Glad to be here. Glad to be alive, my man.
Yes, sir. Absolutely, man.
Yeah. Anything fundamentally that you I know you were busy today too, that you might have caught on to?
Um, I don't know if you talked about this, but some of the central bankers are talking about the terminal rate might end up higher.
Yeah, we
Did you see that?
we touched up yeah, we touched upon it, but I didn't go into the fact that some of them were saying that they're saying that they were talking about the I didn't mention that. We talked about interest rates, but not that part. In regards to that dot plot at the next meeting
Yeah, yeah. They might
may
it,
move
it might
higher.
be higher, and I forget who it was, but there were a couple of them that spoke that said that the actual terminal rate might end up having to increase that as well if they continue to get higher than expected data.
Hmm. Yeah, yeah.
Yeah, so that,
Appreciate you adding that because I definitely didn't. I was hearing about it as I was driving and things like that, listening to this stuff, but I did not bring that part up tonight when we were talking about interest rates. So I appreciate that.
yep, no doubt.
Yep. Joy, risk on, risk off pair. What pair are you talking about? Oh, the New Zealand USD. That could be tricky because of the dollar has the ability to play both sides. If you're looking at in regards to the New Zealand pair, is a pair that could really serve you well in regards to being a data point, not to be all the end all, but a data point in regards to risk on, risk off. It's going to be your NZD JPY. Right? That's going to be your risk on, risk off pair. It's your NZD JPY. Not the dollar, because the dollar can play both sides of the coin. Right? So we don't want to look at that. Dollar could be a safe haven and it could be extremely active, right? Doing risk on situations as well. Right? Depending on what's driving the markets. Yep. So I would look at that NJ as opposed to the NU. All right. And that's where we are, right? Moving up. So we got that boost, right? That China news definitely rallied the markets. So it was definitely markets were definitely risk on yesterday in that regard. So we'll continue to watch to see how that plays out. I want to take a look at the UJ, and then we are going to wrap it up. All right, as we move into Friday and the weekend, there's been a lot of good price action this week. So we know, hey, look, we always start at that weekly time frame, and we have been bullish. 1, 2, 3, 4, 5, 6, 7. All right, straight up. Okay. So there's something to think about too when you're thinking, hey, I think long term might be a position trade, right? So yes, we're trading in and out of waves on the lower time frames, but at the end of the day, it's been moving straight up, right? Off that support level. And then moved up in a hurry. We know we're overextended. We broke the cloud on the daily. We're overbought at some point, right? We see the dollar corrected now. And that's why I wanted to cover this. At some point, this will correct, right? Be beautiful if it happens there, right? That's a nice move. Okay. That's a nice play there. Okay, it's 330 pips. So we'll see. We'll see. These moves take time. We can see we're correcting here. Okay, to the downside already. But I'm highly interested in to follow the more news, especially tomorrow with the dollar. So not ready to make any moves yet. I want to see this ISM services PMI number tomorrow. Okay. Monday, nothing big for the United States. But just want to do some more research, be cautious, right? Because we do have a bullish dollar, and this could just be a very, 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 very temporary correction that's occurring. All right, so just continue to be patient with that. If this price is going to move 300 some pips back to the downside for a correction, guess what? You got time anyway. You got time to get involved with that. So, yep, we're in this 80-20 zone. Let's see what happens with ISM manufacturing. If you're in it already, right, you dripped in a small position. Cool, it's in the zone. Stop at the D, right? Stops at the D. You've got your risk figured out. But before you make any type of additional entries or decisions on that, let's see what happens with ISM manufacturing. If you're in this now with a smaller position and it comes out and it misses the expectations and forecasts, you will see that start to correct to the downside. So you'll be in profit. If you're not in it at all, then you wait for that correction, you wait for a pullback to get involved in further moves. So let's just continue to be patient with these dollar crosses. All right. That is all I have for this evening, everybody. Any questions before we log off about anything that we covered or in general? No? Jeremy, it was a great question on that triangle pattern. I want to find out more about that now, so appreciate that. But that's it. We are going to wrap things up for this evening session. I appreciate everybody being here. It's been an awesome week in regards to participation, posting things, following along, right? It's all about the activity. That's how we shorten the learning curve at the press time frame. So, hey, everybody have a happy Friday. Watch out for that U.S. data tomorrow for the ISM report coming out. And we'll be back this Saturday, 7 a.m. Eastern Standard Time for the Forex Weekly Ritual. Have a great night, everybody. You're welcome.
Thanks.
You're welcome.